It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. Thursday evening, November 3rd, 2016. Wrapping up this first full week of the month of November. Hope you guys are doing well out there. Big day tomorrow. Crude is bearish and trading at several major support levels. Even the S&P is bearish and rotating off the low of the channel. Gold is bullish and trading near the end of a wedge, and the euro is bullish with a spike in channel after a strong move up off the lows this afternoon. We got non-farm Friday on the books for tomorrow. Some big moves in today's session, which means some big, reliable opportunities coming for tomorrow's session. Got a great video, got a great strategy, get some big news for tomorrow. Before we jump in and take a look at these charts, though, I want to remind you, the only place to watch the full-length version of this video is on our blog at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, it is only a small portion of this entire video. Make sure you're on the blog at Sideways Markets. If you're on the YouTube video, though, there's a link in the description of that video on YouTube. Follow that link. Come join me here on the blog for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Grab those charts below the video. You can download all the charts you see me using in tonight's video right below the video tonight on the blog, where it says download today's charts. In the upper right-hand corner, don't forget, if you're not a member here at School of Trade, I got a free pass for you. Grab your free pass to our trade room as a guest for a few days this week or next, upper right-hand corner. And please remember, if you're brand new here to the SOT community, we get a great frequently asked questions page that will answer a lot of the most common questions we get right every day to our live support. And please don't forget, we're standing by here 24/7, 365 to answer all your questions. Use the live support button. I got a web button on the side of the blog and on the homepage of our website. Boy, oh boy, it's been a great week here so far. We're almost through this first week, though. Boy, how about that Game 7 last night? Are you kidding me? That's going to be a tough Game 7 to beat, man. That was an incredible, incredible World Series. Got to tip my hat off. Definitely tip my hat to the Chicago Cubs, and congratulations out to anybody who was able to celebrate last night with the old Cubbies. I have a funny feeling we're going to be seeing those two teams back in the World Series again very, very soon. Boy, they both are young and very, very, very good teams. Anyways, we got some work to do here. Back to work here. We do have some news coming out tonight in the overnight session all the way down here. We got some news from Australians and, of course, right, our friends in Japan as well. I get some news at 8:30 and 9 p.m. Eastern time. I don't think we're going to see much of an impact on that, though. The big news tomorrow is that non-farm payroll report. It's Friday, November the 4th, the first Friday of every 1 month. As long as the first day of the month is not a Friday, we're going to get the non-farm payroll number. That, of course, is the employment situation tomorrow morning at 8:30 a.m. Eastern time. Most important thing to remember, okay, whenever we have a Friday, we know Fridays are early in, early out scenarios. Get to it early tomorrow after 11:15, 11:30. You know, it'll be depending on how the price action looks, but typically on a Friday, employment number irregardless here tomorrow, typically on a Friday after 11 o'clock, 11:15, 11:30, the volume will be very, very low. What that means is it only takes a small handful of contracts to blow out your stop, right, and disrupt what would normally be a very reliable setup. So get to it early, get out early. I'm sure there's some beautiful fall weather wherever you are on this planet of ours. And, of course, enjoy the rest of your day. But get to it early and get out early tomorrow. Ultimately, there are two scenarios you want to be thinking around this news tomorrow. It's either going to be too fast to trade or too slow to trade. Now, you got to remember, on Wednesday, let's go back in time here. On Wednesday morning, we heard from the ADP employment report. That number is usually a leading indicator for what we're going to get on Friday's non-farm payrolls. What I want you to be aware of is that now, since Wednesday at 8:15 this morning, the analysts, the traders, investors, hedgers, speculators, fund managers, everybody has known right now for more than 2 days now what the number is likely going to be. What does that mean? That means that whether we like it or not, most of these markets have already priced this news in. Okay, what that means is knowing what is likely going to be coming, traders place their orders based on what they're now biased, right? They now have a bias because they know enough information now to place their bets ahead of that news. So knowing the markets are most likely priced into what was told to us on Wednesday, now we set this thing up for tomorrow morning at 8:30. If the number comes out as expected, the market will typically be quite sluggish. And it will take anywhere from 10, 15, 20, sometimes 30 minutes before we really start seeing the day kind of get started. In other words, the markets are already priced it in, nothing surprising there, and it will then take some time for the market to find a new direction. So it may be slow tomorrow if the number comes out right as expected. Okay, that's one scenario. Okay, give it some time and then follow the direction from there. I'm going to give you guys some strategies here tonight, and we'll see how it plays in for tomorrow. Now, the second scenario is, right, which is a little bit more common, is where the number comes out either above or below, in other words, outside of expectations. If the number comes out outside expectations, most professionals will be ready, right? If it's above or below, they'll be ready for backup plans. When the number comes out, if it's outside of expectations, then we know traders will execute their backup plans, right? If you're a professional trader, you want to be ready for if it comes out within expectations, above or below. That way you know what the plan is going to be if for some reason it surprises everybody tomorrow, right? So when that happens, if it does surprise everyone tomorrow, which happens all the time, right? It's not uncommon whatsoever, but usually that will result now in a very violent reaction. In other words, traders are now going to have to get in and get out of new positions, manipulate their orders, right, to be able to go to plan B or C, right? So we know either one or two scenarios. Either it's very slow tomorrow around the news because it comes out as expected, give it 10, 15 minutes to figure out where it wants to go from there, or, which is a little bit more common, is it really starts violently moving up and down. Same strategy though. Give it 10 to 15 minutes, let it calm down, it will eventually find its direction, and then depending on how that fits into what we're talking about tonight, right, we'll then of course make our moves from there. The hardest part of my job on a Thursday night newsletter before Friday's non-farm payrolls is that what is bullish now may not be bullish tomorrow morning at 8:35 a.m. Eastern time. So I want you to promise me something. I'm going to give you some strategies tonight, and we have to kind of wait and see what's going to happen tomorrow. You're not going to see a lot of volume overnight. As we talked about last night's newsletter, traders are not going to want to step into, basically traders are not going to want to be fully loaded up tomorrow ahead of the news. They're going to be protected against big moves. They're going to be somewhat low volume or almost flat, heavily protected, and then once the news comes out, then they'll start getting in, right, and getting out from there. So bottom line is, we got some bullish markets, we got some bearish markets for tomorrow. Promise me tomorrow, though, you will not sell into a runaway bull market just because I said it was bearish, right? We have to play this by ear tomorrow. Promise me you're not going to sell into a bull move, right, or buy into a bear move, because when these things get moving on non-farm Fridays, it can be tough to stop them, and your little stop loss, right, is not going to do, right, a good enough job to protect your capital. So be aware of that tomorrow, right? We get some minor news here. Again, all of it's pretty much minor, right? France, Germany, the ECB, all of this stuff is probably not going to have too big of an impact, right? But be aware it is happening tomorrow morning at 4:50 and 5 a.m. tomorrow. The employment number, of course, at 8:30. There's a bunch of stuff coming out here tomorrow at 8:30, right? This international trade and the news from Canada will all get gobbled up, right? Basically with that non-farm number tomorrow morning. And then, of course, we have the last bit of news there tomorrow. We get the PMI, right, from our friends to the north at 10 a.m. Eastern time. And if you happen to follow this stuff, the rig count at 1 p.m. Eastern time, I think it's useless information, to be honest with you. So early in, early out tomorrow. You know the plan. Okay, don't gamble away your money. There's so many great reliable times to be trading. Tomorrow, trying to predict reversals or call tops and bottoms during news events is trade account suicides. If you like the money in your account, right? If you like that money in your account, right, you'll take my advice there and be very careful tomorrow after that news comes out. Now, let's put together a plan here tomorrow. Again, everything really hinges on what happens tomorrow at 8:35 a.m., right? The news comes out at 8:30. By the time we see 8:35 come around, we'll know more. I'm expecting some low volume environments, right? I'm expecting some low volume environments. We might get them. We might not get them. There may be some pre-positioning ahead of the news tomorrow. We'll have to wait and see what we get. But again, it's very much a difficult job for me to predict this ahead of the time tomorrow. So let's get started. Crude is bearish and trading at several major support levels this evening, which tells the bears to wait for a correction up to resistance levels overhead or look for a strong breakout pullback below the support levels for another leg tomorrow. The bears will be looking for opportunities up above 44.84 and below 44.37 tomorrow, either waiting patiently for price to push higher so they don't have to sell low, or waiting for a strong move to break below that triple down level right at today's lows. Buyers don't have any proof right now, so they need to wait for a strong breakout pullback that can get them in above 44.84 for a move back to the battle zone, and then again above the battle zone for a test of today's high at 45.88. As you can see here right now, there's a couple key components here on this chart. First of all, we have a multi-tiered bear channel. Now, if you're a student of mine, I hope you're yelling at the computer right now saying, wait a second, Joe, that's not your typical way that you drew that channel. You're right. Ended up drawing this channel down off of the lows and ultimately seeing the midline fit up nicely here and attach to that high. Every once in a while, you've got to be a little bit creative on this. That is the best fit for that channel. Now, with a bear channel, right, with a bear channel, we know that we want to be selling here up and back down for a retest of that low. The sellers will be looking for price to go up and then come back down to retest that low. What else do we have here? We have a wedge. This wedge, of course, now helps to understand, right, what these guys were doing, because you can see we didn't get very good channel rotation today. This, of course, is a bear wedge. The bear wedge is pretty darn important because it tells me where we have a key area of support around 44.41. Wedges always tell me, we talked about this in last night's newsletter, I believe it was last night or the night before, wedges also tell me to look for price to go up and then come back down again. More importantly, though, wedges always tell me to look closely for prior areas of resistance. Right? I've marked a few of them here. Wait for price to get up and then back down, right? And then back down below. So the bear channel and the bear wedge, right? They tell us we have some work to do here to get up so we can sell it back down so we're not selling into support down here, right? The sellers don't want to sell low. They want to sell high, right? Better value up there. Now, speaking of selling low, here's another really important clue. We got a higher low on the chart. That higher low is going to create a rising support trend line. Rising support trend lines tell the sellers to beware trying to sell into them, right? Sellers should be very careful trying to sell into that rising support. And then it also tells the buyers to be ready, right? Because now we know the bulls may get a chance here. If the bears don't want to mess with this rising support trend line, now the bulls have a chance, right, to run this price higher. How high will they get it? That, of course, is to be determined. So we get the measured move, the triple down, the wedge, the rising support. I don't feel like messing with this area here. So really right now the sellers are looking for either basically, again, above, find these areas of resistance, right? I would look at these two areas specifically, right? The battle zone, of course. And so we're thinking up and then back down, up and then back down. Again, looking for buyer failure, buyer failure. You know, think about something like this. As we go up here, buyers try to hold a pullback, right? They fail, and we get a chance. Let me draw this a little bit better here. Imagine now here, right? We go up, buyers try to hold the pullback, they fail. Buyer failure, right, into that breakout pullback. There are two opportunities there for the sellers now to sell, right, without selling directly into that area of support, right? So up, back down, up, back down. And again, keep an eye on this area here. Get a beautiful 45.20 untested reversal line there at 45.20. That would really be the ideal spot here. Again, we're going to wait and see what happens with the news tomorrow. What about if we go lower? What if we don't correct higher? Well, it is highly probable that we correct higher here. But if we don't correct higher, though, what I want to make sure I avoid is selling into that low. So I'm looking for a breakout pullback down below that triple down. I'm going to want to make sure that moving average gets there as well, and I've been looking for that breakout pullback at that moving average below that 44.37. And of course, at that point, we'll go looking for another measured leg, right, and another double down from there. So sellers, either get it up and bring it back down, right, or get it lower and hold below that low. It's going to take a lot of strength, though, to get that price going lower, and we may get it tomorrow off of that news tomorrow. What about for the buyers right now? The buyers really have a couple different options here. One would be down at that low, right? Price comes down, sellers can't hold, it spikes back up. Okay, another one, of course, which of course would be a short-term opportunity here, will look something like this, right? So of course, Up we go there, right? Up we go there, right? So breakout, pull back above that 44.84, then get through the battle zone.